If you like to be a successful trader, you need to understand the market structure. At any given time, the market can be in three situations: uptrend, downtrend, or sideways trend, which is when the price is moving horizontally. In the process of developing and transforming to another phase, we are dealing with concepts like pullbacks and breakouts. First, I explain the market structures and how you can identify trends, and then I will introduce an amazing indicator on TradingView that can effectively help you with price action and market structure. Just make sure you watch this video until the end and let's get started. Alright, let's begin with uptrend. When the market is in an uptrend, the price makes higher highs and higher lows. The price will never move just like a straight line. There is always a counter trend movement. These movements against the uptrend are called pullback, retracement, or correction, and they are actually the main element for identifying uptrends and drawing trend lines and finding trading signals following the uptrend. As long as the price is in this structure, we say that the market is trending up. But in case if the price is not able to cross the previous high, that could be a sign that probably the uptrend is weakening and the price may go to a trading range or a reversal may happen. And in another situation, if the last higher low is broken, in other words, the price goes below this level, it shows that the structure of the uptrend is already violated and probably that is beginning of a downtrend. And on the other hand, when the market is in a downtrend, the price makes lower highs and lower lows. As long as the price is in this structure, we say that the market is trending down. But if the price is not able to go below the last lower low, it's a sign that probably the downtrend is weakening and the price may go to a trading range or a reversal may happen. When the last lower high is broken and the price goes above this level, it shows that the structure of the downtrend is already violated and it's a potential signal for beginning of an uptrend, exactly like what happened here. And in another situation, when the market doesn't have an overall upside direction or downside direction and the price is actually moving horizontally, like this part of the chart as you can see, this is called a sideways trend, or it is also called a trading range. So when the market is not in the definition of uptrend or downtrend that I just explained earlier, it is said that the market is not trending and the price is in a trading range. Alright, this is what uptrend, downtrend, or sideways trend are and how they are identified on the chart. And now I want to introduce an indicator that can help you to find trading opportunities by the help of market structure. Before I add the indicator, I'm proud to announce that recently I published a book, The Art of Price Action Trading. The link is in the description and you can get it later if you're interested to learn price action trading and take your trading to the next level. Alright, to add the indicator to our chart, here we click on indicators and we search price action volumetric order blocks. This one, which is written by UAlgo. Alright, this is the indicator, and as you can see, it's added some information to the chart related to market structure and also order blocks. In case if you don't know what order block is, order blocks are a specific price range where a large amounts of orders are executed and the price suddenly changed its direction and the market experienced considerable movement of the price. Order blocks are identified through price action analysis by the help of some patterns, but it is not easy in practice and it needs lots of experience, but there are some indicators like this one that can help you with identifying order blocks. And the excellent feature of this indicator is that it shows a volumetric order block and you can see a measure of buying and selling volume separately, so you can have an evaluation on the buying or selling pressure in the market. The green bar shows buying volume and the red bar shows selling volume. For example, for this bullish order block, you can see that we have considerably higher buying volume. So here the buying pressure is really significant in this price range. This shows that here in this price range, lots of buy orders are executed. By comparing the green and red bars, you can have an evaluation on their measure in compared to each other. These levels can act as a potential support or resistance level for the future price action. For example, this bullish order block will act as a support level for the future price action if the price turns back to around here. Alright, now let's see what are these information which are related to market structure. As I explained earlier, when the price is in an uptrend, it makes higher highs and higher lows. And as I explained, when the last higher low is broken and the price closes below this level, it could be a signal for beginning of a downtrend. When this happens and the price closes below the last higher low, the indicator shows a line and MSB on the chart, indicating that the structure of the uptrend is already violated, and this could be beginning of a downtrend. In this indicator, it is called market structure break and shown by MSB, and this is also called market structure shift or change of character. But regardless of the name, the important thing is that the structure of the uptrend is violated, and this could be beginning of a downtrend. This is what happened here, as you can see. In downtrends, as I explained earlier, the price makes lower high and lower lows. When the price makes a lower low and goes for a pullback, this low can act as a potential support level, preventing the price from going lower. When this level is broken and we get a candle closed below this level, this is called break of structure, and it is shown by BOS, and this is a signal that the price is probably going to decline more. Following the downtrend, when the last lower high is broken and the price closes above this level, we have similarly MSB signal telling us that the structure of the downtrend is violated, and this could be beginning of an uptrend. In this case, you can see that before the break, we had a bullish order block with considerable higher buying volume, validating the breakout that happened here. So here we have higher probability that this is not a false breakout and the price is turning to an uptrend. In uptrend, the price makes higher high and higher lows. When the price makes higher high and goes for a pullback, this high can act as a potential resistance level. And when this level is broken and we get a candle closed above this level, we get a BOS signal, which is break of structure, telling us that the price is probably going to advance more. In this case, you can see that before the break, we had a bullish order block, and the breaking candle itself is a strong candle and closed well above the level and showing bullish momentum. So we have a strong setup here. But in this case here, you can see that the breaking candle is not closed well above the previous high, and it's just on the edge of the level, and this is not a strong signal. This indicator is one of the best price action indicators that can effectively help you with market structure concepts when you are doing price action analysis. Of course, you should not completely rely on this and still need to validate everything based on your price action trading knowledge. So this is a helpful tool that can help you with your trading decisions based on price action concepts. No indicator or trading method will give you 100% guaranteed signals. No, this is not possible, and losing positions are always part of the game, and if you don't manage your losing trades properly, you will definitely lose your trading account sooner or later. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. By the help of this strategy, you can limit your risk to a minimum amount so you can protect your trading account from falling significantly. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.